Look, clearly the Brexit vote throws up the probabilities of some very asymmetric risk market outcomes, and we know that Australian risk assets will follow with some degree of sympathy to where international markets will go. Clearly a vote to leave for the UK to leave the European Union will throw up a series of volatility challenges for markets. It's not only the initial one-off shock. We don't know what system will replace the marriage that we have between the UK and the EU at the moment, and what the divorce will look like and over what time frame. So there has been no plan B that's been announced with the referendum vote. There can't be a plan B that's announced because it does justify the Leave campaign to some degree. And as much as I guess markets are getting some comfort now around the fact that Britain will remain, and certainly betting odds would suggest that the flow of money is happy for Britain to remain at this stage. It throws up this anti-establishment type of question, which we're seeing the world over. We're seeing it manifest with Sanders and Trump in the US, and to some degree here with a very cobbled up Senate system that we now have. But so the Brexit, the near-term issue, would have a huge impact on risk markets, and we would think that a sell-off of something along the lines of 25% in sterling and a similar kind of move potentially in euros, and that volatility shock will move out into other markets. In a Remain scenario, I guess we get a relief rally and arguably can probably retest the highs in equity markets in the near term. Look, I think the problem with these kind of votes is it's an incredibly binary outcome. We'll be one of the first markets open in the world when the outcome is actually released. But the market's going to move very violently and very quickly, and then we'll start trading thereafter, so there'll be very little time to react. Clearly, owning some optionality and being well diversified is a great way to navigate these kind of scenarios, and I guess that's one of the reasons that we love bonds as a product. We never argue for 100-cent allocation in the dollar to bonds. That's ludicrous, but we don't think zero is the right allocation either, and so well diversified and well constructed portfolios will navigate either or scenario in good shape.